All right. Good morning, guys. Welcome back to another trading room from Tradenology.com. Dan here. Now it looks like we got the guys rolling in. We'll unmute you, Mr. DV.
Good morning.
Make sure I got my volume up so I can hear you. There we go.
Good morning.
Good morning. 1 minute late. How are you guys doing this fine Tuesday?
Well, I got you down as 2 minutes late, but
Uh-oh.
I won't quibble over a minute.
Yeah, the wife got sick, and I think I'm getting her crud.
Oh, no. My wife has been sick for the past week and a half, and I'm knocking on wood that I don't get it. I haven't felt any sickness so far. Good morning, Greg. Good morning, David.
All right, we got a decent group rolling in. David, we got what you're looking for, so be excited. I got some new fancy stuff, and we can definitely talk about it. Dave, I did see your last-minute email there.
Yep, and we have some work to do on that, though. So we need to.
Oh, you'll be surprised. I think you'll be happily surprised at what I did last night.
Oh, good. Hopefully it's the same thing I did.
We'll see if our numbers match.
Okay.
All right. First, let's take a look at that spreadsheet because that's where we're starting at. The threes over here. We'll swing it up. We're starting to see some positive in the binary trend, but we plateaued down here in the trough of -2, so I didn't like that much. But we definitely still had just a slight bias to the upside this morning. We're still coming down on the UD percentages here. The eighth column, 50 to 51, no change there, 0.01%. OBOS went down 1, bell curve came down 1, so a few factors to the up, but the bell curve was still flat, so that was not completely in agreement. And then looking at the 4-hour chart, there was definitely a potential, or I should say borderline continuation, which is still a possibility because on that last 4-hour bar before the open, before the top of the hour, we had a negative 0.19, almost 0.2. So it's real close to our 0.25 where we look for continuations. And I'll pull that over. So this one's an earlier in the overnight session. So there's a lot of down movement overnight. That's why I'm talking this borderline continuation where we might continue down, which we see currently it is. But right around the open, if I pull over the 5-minute chart, we see it did definitely jump up.
I think we need to mute Kyle.
Uh-oh. There it is. Thank you.
Yeah. Sorry, Kyle. Something going on there.
So, yeah, we had a 5-minute down move. Then the second 5 minutes in, we had a decent up move. So it is still playing out for the entire day. Again, that's why it was only a slight advantage on the bias today for the trade setup alert. So what we were looking at there, and one thing that David actually mentioned is since it's been a couple of years, if I pull back over that spreadsheet, over at the very top of it, some of you guys might remember this back from when we talked about it before, is we have, don't I have it on this one?
Oh. I think the new one was removed.
Okay, let me pull up the other one I got then.
Yeah.
I forgot about that. It's a good thing we have multiple spreadsheets.
Because we extended the columns out.
That's right. Okay. So I'll just grab one from last year.
Yeah, I grabbed mine from the total market spreadsheet.
All right, here comes one that's going to have the older stuff I'm looking for. Then we'll talk about the updates. So up at the top, I'll zoom up again. YMNQ, here's where we had what the tick sizes were, the notional value of the contract for the 4 major indices. You see this goes back to 2017. It was still the TF symbol before it was RTY. And then now with the micros, M2K as well. So we were looking at these and what has happened. And David also noticed it, David L here. He was noticing that he had a long position on and the VA trade went down, but he was still profitable because this total value per contract has changed. Look at what these prices were back then. We were 20,000 on the Dow. The NASDAQ was still at 5,400. So this has drastically changed since then. So what I did is I started crunching the numbers last night, and I updated everything as of last night. So now this is a little bit of a mess, but don't worry. Here I have both minis, ES, NQ, YM, RTY, and their associated micro contracts under it. Here's what the current notional values were as of last night. So we went from, we'll pull them over at the same time. Boom, boom, boom. The ES used to be 118, now it's 162,000. NASDAQ was at 107, now it's 180,000. Dow, you can see 143, so that's jumped $40,000 for one contract on the YM. So whereas previously trading the YM and Q was only about a $3,000, $3,700 difference, it was pretty even on. It was enough. It was close enough, basically, that it was 1 for 1. Now, when we look at the YMNQ comparison, we have a $45,000 plus difference in the notional value of one contract. So that's why you were profitable, David, when you were long, and it went short because that NQ made you money. So what I've done, Dave, I'd like to get your input on this.
So this looks very interesting.
I went through and I lined up. So here's contracts 1 through 20, because what we need to do is we need to find a commonality, right? So we're even again. Or if we need to have some type of ratio, what is that ratio? So on these columns here, I got the YMNQ and the micros. Over here, I got the ESRTY, because I know some people still do trade that. Same thing with the micros and the E-minis. So I started looking at, if I want to do YMNQ, the minimum one contract is now 143. If I look at 8 contracts on the micro NQ, it's 144, so I can do 1 to 8.
Oh, interesting. I like that. Yeah, okay.
And same thing for what might be easier is just use micros on both, where you're 5 and 4.
5 to 4, right.
Because now if you're trading 8 contracts, that might bite into some of your profits depending on whoever your broker is and their commissions, because we know there's still commissions on futures contracts. It's not free like stocks.
Gotcha. Yeah. Very interesting. I like that. Good job there, Dana. There is one calculation, though, that might prove interesting as well. But go ahead. I'll let you finish first.
Yeah, the other thing I was just looking at was ESRTY. So there, it's much closer. And I don't think he's in here, but our friend in New York there, the previous former firefighter, would have had a ratio. Now it looks like that's actually down to like a 2 to 1. So
right.
1 micro ES to 2 M2Ks. So that's not bad at all.
Right.
And if you go up, if you do 2 to 4, it stays in line, both for micros and E-minis. So the ES is just 1 to 2 for RTY. I think he was doing like 3.
I think it was 3. Yeah, I thought it was 3.
Yeah, I want to say he was like 3 RTYs or 3 minis, or excuse me, micros to 1 ES. I think is what it used to be. But either way, now we have this chart that's not updated yet. Andre's
well, 1 to 2 MES M2K is the same thing as 2 to 4. Really, you're just doubling your. You're just doubling your thing.
It's just math coming, right? So if you looked at this here, you could do 5 to 8, or you could do 10. 10 to 8 would make sense. That's where you graduate to 1 contract and 8 MNQs there.
Right. Yeah, but you can't get 0.8 of an NQ contract, though.
Until M1 Finance does it, and we do fractional trading on futures.
Yeah. Yeah. Yeah, that would be interesting. I don't think that would ever happen. Good morning, Andre. Can you provide a link to the uploaded video about the direction of tradingology? I'm not sure what that means.
Were you in the Wealth Masterclass, Andre? I think you were.
Yes, he was.
He might be referring to a conversation we had there.
About strong market or what?
About both. With the switch over last year and whatnot.
Both. Okay, well, here's the link for what's changes to strong market. Basically, Dan we're talking about different strategies. I think that's what he's talking about for different market conditions.
Very well might be, yes.
Yeah, I don't think we have a video for that though, except it was in the master class a little bit.
Yeah, so high level, think about it this way, Andre, is trading, day trading, short-term income type trading, that's still things you'll find at Tradingology. And more of the long-term investing, wealth management type of things will be found at Strong Market as the easy way to carve it up in your mind.
Yeah, exactly. Yeah, so let's take a look at one other thing though. Yeah,
what do you got? Which one are you thinking?
So I think that's probably your calculations are absolutely correct. However, if you go back to the spreadsheet there for a second on the
original one,
the one you're on right there.
Okay.
Oh, well, okay. So you changed it. Okay, so you put this into a new one. All right. So let's take a look at the original one there with the formulas on it. And if you scroll all the way over to the right.
Yep, there's a few more columns.
Yeah, so you got the value of a 1% move, and also you have the adjusted for volatility. So it could continue to validate what you just did, but I just kind of want to go through those. So if you take all of those columns, take the whole thing, all the way from the left side over to the symbol side. GZ, so it's like
I tried that. I didn't get calculations from these for some reason. I wasn't sure if it was a source cell.
No, you should be okay. So if you go all the way from the GK to GZ and copy the whole thing and then make a new one, we'll update the prices and take a look.
I think that's how I started first because I added a line under these.
Oh, okay.
I'm like electricity. I take the path of least resistance. So I'll just copy it down here once.
Yeah, it worked out okay for me. So now we just update the price. So you can copy from the other thing. You updated the prices on the other one?
We'll do this. Oh, I can't do it that longer. Okay, stand by. Yes.
I can call them out to you.
Yeah, if you want to do that, that's fine too. I can see them right here too, though.
Okay.
So we'll just start with the micros, and I'll update E-minis, or micros later, excuse me. We'll do E-minis live. So S&P is 162,750.
No, well, no, and that's the price. That's the current price.
I don't have that on here. You're right. Yeah. I'll need your eyeballs.
Okay.
I was thinking of something else.
Yep. So, whoops. Here we go. Okay. So the current price.
32.68.
Let's say for the this is for the ES contract. So I had 32.57 as of the open this morning.
Okay, gotcha.
32.57 for the S&P minis. 90.25 for the NASDAQ 100.
Okay.
Dow 30 28.589. And the Russell 2K 1657.
30 28.589. What's the 89?
The Dow 30 is 28,589.
Oh, I heard 30 in front. I thought we were still above 30,000 for some reason.
Yeah. Oh, wow.
28,539. That's what you said.
589.
589. Okay.
28,589. And the Russell is 1657.
All right.
Yeah, there we go. So now if we scroll all the way over to the right, we can see that the value of a 1% move between the YM and the NQ, it used to be only $30 on a value of a 1% move, but now it's stretched out to $370 approximately. You see that value, dollar value of a 1% move?
Yeah, I got right here on.
Yeah, it's only like what, $38, and now it's over 470 or 370.
Why am I not seeing that? Let me make this.
GW, go down to GW column.
Yeah.
Right. The two in the middle are the ES, or I'm sorry, the two in the middle are NASDAQ, and the one.
Oh, $30 difference.
Yeah, it's a dollar value of a 1% move. Was very, very close. It was only $30, about $38 a piece. Yes.
Yeah, now it's like you say,
370.
Yep.
Right.
Yep.
And if you look at the dollar value of a 1% move adjusted for volatility, it's even more. It's like $500,
Yeah.
450.
Whereas before it was less than
160, $70. So it's gone up significantly. However, what we need to do is calculate the average daily percentage move to see if that's changed.
Sure.
So if we go back to, if you take the original spreadsheet now, take, let's say the last 365 days, or let's do a half a year, let's do 6 months. That will probably do it. Or you can take 365, it's up to you. We'll take the percentage change, which is, see, we don't even have that on here. We only have the spread. Oh, no, we got it right there.
Sure, I was going to say, I thought it was over here, yeah.
Yep, so you can take column B and then like back for a year.
Yeah, we'll go back to 127. We'll go 1 year.
Yeah, let's see if that average daily move has changed.
So I have to copy that into the other one because that's how you did that before. Just like this, because you got to make everything a positive.
Yeah.
Oh, it's wise. I don't like it when it does that.
Oh, you have to do the when you paste it. Yeah, you have. Let's get that. You know what to do, right?
Trying.
Okay, so when you paste it, you have to do paste special. Otherwise, it's going to
pull over the deals right on.
Yeah.
All right, we'll delete that.
Right click. And go to paste options.
That's not letting me.
Oh, it doesn't do what?
That's rude.
Yeah, that's weird. You don't have it. You don't have it. Yeah, you didn't. No, just copy it again.
Try one more time.
Yeah, because I think it uncopied when you did that.
There we go.
And then go to values. Yeah, there we go.
One. Now, here's one that I don't always remember is what's the trick to changing them all to positives?
Yeah, it's been a while since I've done it.
I ran out of juice in my Excel Kung Fu last night.
Yeah.
Let's see. There's a way. Everybody knows off the top of their head. Let me know.
Yeah.
Greg's been looking at it. Yeah, absolutely, Greg. Ratios are very handy.
Yeah, it's been a while since I did that. While you're trying to figure that out, David has a question. I'd like to hear a discussion today on the potential true trend day yesterday. Yeah, it was, boy, it looked like it was going in the right direction. And it looks like, so that starts to happen when volatility starts to pick up. And so we have the potential, if we start to see 300, 400, 500 point moves on the Dow every single day, you're gonna see higher probabilities of a true trend day coming, because that's when they happen. So yesterday didn't hold. You're right; it just didn't hold. So that is not. I mean, it was starting. It looked like it was really going to do it. And what do we got today? Actually, today
we're going up
on the vol, but we're not even close.
No, it started high, bounced down. Now it's moving back up.
Yeah, so we didn't hit 2,000 before 10 o'clock. So we got to hit 10,000 before 2,000 plus for a true trend day. But if we're up like 300-400 points today, and we're down 450 yesterday, when we start to see that kind of volatility come in, the chances of a true trend day become higher. And so you really want to kind of pay attention, because you could hit, I mean, it's like hitting the lottery almost. So yeah, even though it didn't hold. All right, let's see if we can figure this out.
That's one thing I was noticing too along those lines, where typically when you start to look at historical Market Time or Excel original spread or script here, is we usually see the oscillation, right, where it's low then it's high, where we had 3 days with the negative indicators, and it usually doesn't. That's not typical, just 3 days itself. We've so commonly seen, a 1 day flip, a 2 day flip, or 3 day flips are different. So it was almost one of those, hey, it's time to have an up move. That's what we're seeing today now, where we're way up 77 on the internals. And this is flirting with the 0.8 and 0.2 now. That's why we'll probably continue to see strength. And as we know, they make it whatever they want to. They try and pretend it's a coronavirus, and we can have good debates about that. I think I saw your fun tweet on that, Dave.
Yeah, for sure. Okay, so what you want to do is go up to the top of that Excel spreadsheet again.
Yep.
And then the very top number. Okay, so just click on that, get out of the whole box there, and then go to next to it, to the F side, and go equal, capital A, capital B, capital S, parentheses, E1. There you go, and then just copy that down. Oops, you have it on text or something. So click on that whole column and go to format.
We don't want it as a table.
We want it, you want it as a number. No, you want to do it as a number. There you go. So now just hit enter. You should be able to hit enter on that cell again. There you go. Okay, so now you just want to copy that all the way down and then get the average.
Perfect.
Yeah.
Thank you.
Yep.
All right. Then we'll do the fun one here. Dun, dun, dun. I suppose it just mouses over too.
Well, you could. There's also go back to that formula.
Yeah.
And just hit average.
Average is 0.55.
Okay, let's compare that. Now that was the Dow, right?
Yes.
Okay, now let's compare it to what we had for 2017. Yeah, it's 0.53, so it's gone up a little bit. So change that to 0.55.
Then we'll do the other one.
Yeah, so David, pay attention to, these big moves. So as soon as the first half hour, first 15, 20 minutes of the, now here's one thing to think about when it comes to true trend days is that if it's already down 300-400 points, you're probably not going to get, a lot of movement, even if it is a true trend day. So what you want to do is you want to watch it the first 15 minutes or so. And if you have a market that is down, if it's going to be a down day and it's only down maybe 70, 80 points, then you probably have a much better opportunity to take advantage of a true trend day when the price hasn't already moved a lot. So even if yesterday was a true trend day, we're already down 400 points. There wasn't a lot of movement left in the at all. So on an up day, true trend day that goes up, if it's if it's like 70, 80 points up or less than, let's call it less than 100, the chances of it moving 400 or 500 points are much better, and you're probably going to have a much better opportunity. So that's really important. If it's already up 500 points, already down 500 points, you're not going to get much of a movement or opportunity. So the odds are against you making really good money. All right, what do we got?
0.75 we went up to from a 6.7.
Wow. Okay, so the volatility has increased dramatically on the NASDAQ. And so the difference then is even higher. So the dollar value of a 1% move adjusted for volatility then has jumped. Instead of $170, what's the difference between those two? It's like,
Oh,
wow, it's like 700, 600 and something,
yeah.
640. So yeah, so now your spreadsheet makes all of the difference in the world. Absolutely. So now you can see that. Let's go back to your spreadsheet. Now this is the real value of what you did last night. Absolutely.
That proves exactly why it's not 1-to-1 anymore, because we're seeing those higher numbers for the averages. Absolutely.
Yep, that's correct.
So good catch there, David L. Absolutely.
Even though he made money on the spread and went in the wrong direction, but
sometimes it's not bad to accidentally make money.
That's true.
Don't look that gift horse in the mouth, right?
That's why in the Wealth Masterclass, I said study probabilities and read Edward or Thorp's book on blackjack and game theory, because there are. I mean, sometimes you just get lucky. You know?
Right. Yep.
And you know what? I was thinking about that the other day too. Is that just in blackjack, if you do play any kind of casino games, blackjack, craps, whatever you play, there are times in which you have streaks. So you'll go on these streaks where you're really, really lucky, and you get cards perfectly played to you, or you roll the dice perfectly, right? It's the same thing in life. You have these moments where everything you do is like great. Everything works out perfectly. And so you think you have good luck, but it's just probabilities. And then you have other times in which you could go, I had probably 6 weeks last year that everything I did, no matter what, went wrong. My car broke down. I went to pick up my car. They said it was fixed. It stopped on the highway. And I had to take it back again. I mean, it seemed like no matter what I did, everything was going wrong. And so so when you think about it, a lot of times life will deal you these cards and the probabilities, and sometimes you get into these streaks of really, really long bad luck, and then you get into other streaks in which there's really, really good luck. And so that's why, while I don't advocate gambling or anything like that, studying probabilities and kind of the lessons learned about probabilities and randomness in your everyday life can be beneficial, because if you start to see you're going into a good luck kind of a stretch, you might want to do something different. You might want to take advantage of that and realize that things do change, right? The only constant is change.
Yep.
And so you might go into a long streak of just everything going right in your life. Everything is perfect. You get that new job, or you make a ton of money, you do whatever it is, realizing that you're probably that's going to cool down eventually, and you're going to go into maybe a neutral streak or a losing streak. So it's just kind of interesting. The name of the book is called Beat the Dealer, by Edward. I think it's Edward or Edward O. Thorp, something like that. Beat the Dealer by Edward O. Thorp. And if you look him up on, he's got a website too, where he talks a lot about probability. He was also very involved in the in doing quantitative. He was a proponent of quantitative analysis for hedge funds, and hedge funds were looking him up, hiring him as a consultant because of his knowledge of probabilities. Very interesting guy.
Welcome, Stephen. Stephen's one of our newer members, so I caught you coming in there. He's got a question on what he should focus on. Stephen, my recommendation to you would be to go through the volatility arbitrage masterclass first. Then if you want to look at the nuts and bolts behind it and where it all came from, the HLM or HLM 1 and 2 courses, which were 2 previous years in 2017 and 18 that Dave did, those will kind of show you, it's like taking apart the car and looking at the engine. So start with VolArb, and then there's also a ton of resources. Since I know you have the complete market timer system, there's a ton of resources on getting those installed and how we look at those. So that's my recommendation first, is start there, and then hit me up if you need anything along the way. And welcome.
Yeah, welcome, Stephen. Good to have you here. Greg, thank you for the link to the book. There's also, that's his website as well. Let's see.
Did I miss any questions in there? I don't think so.
I don't think we're good. All right. So yesterday, yeah. Now, I'm sure you have that PDF file that I wrote on the Triple T days, right?
Yes.
Okay. So going back to David's question, there's a couple things that you really want to look for. Number one is that the first 15 minutes, we have a advanced decline above 2000. We've got the UVOL, DVOL lining up perfectly. There have been very few opportunities since the 2008-2009 financial crisis. However, if we do see the kind of volatility we saw yesterday, and it looks like, and here's another thing too, is you got, which script you have over to the right there with the Dow? That's the internals. Yeah, that's the market internals, MTXL internals.
That is correct.
When that is like at the level it is now, at 75 or something like that, that means the majority of both the volume and the number of issues are 75% or higher to the upside on the NYSE. That's a strong day. And so even though we don't have a perfect Triple T day today, the advanced decline is not above 2000, but the up-down volume looks pretty good. Those are the kind of days in which you have a great deal of confidence of buying the dips. And the market could go higher. Let's say right now it's up 179 points. When we started off this morning, the numbers were almost the same, but we were only up, 40 or 50 points?
Mm-hmm.
So, or maybe even 70 or 80 points. But the point is that those are the days where you want to buy the dips if you're going to do day trade. Great stuff. I mean, just absolutely perfect. The biggest losing streaks that I've ever had in day trading, going back to when I started, like around 2000, 2002, was when the market internals, I've simplified it now because of the MTXL internal script, when it's between 40 and 60. Those are the worst days to trade because you never know if it's going to trend in one direction or another. Usually what will happen is it just kind of goes up and down. And sometimes you get these real large shakeouts, where it goes up 50, 80, 100 points and then it drops like a rock, or it goes down 100 points after it looks like it's trending up very nicely. Those are dangerous days to trade. Yeah, I can do that, Andre. Let's see.
I'm trying to find it right now too. I think I almost have it here.
Okay.
It's one of those, I trip over it when I don't need it. When I need it, I can't find it.
I'm pretty sure I have it here.
What was that under?
Yeah, here it is. I got it.
Okay, cool. Thank you.
There you go.
I'm losing touch with getting my wife's crud. My search abilities are reduced.
Yeah, I know. It's like, and it's the worst part is you can't open windows and doors. You can't you can't get rid of the germs. You're stuck there. Yep. Oh, when my kids were small, I used to get sick all the time. They'd bring crap home from school. I'm so thankful they're gone. It's just, I don't get sick anymore.
So there's just different screens. Is there one particular one you wanted to talk to or?
This is, you can show the imperfect day, which is like, that one. I mean, that was the day that I kind of started paying attention. I wish I paid attention to this earlier, but I didn't discover it until I think that was, what's the date on that? It was like, it's April. I've got the date down there because the date up above there, the screenshot is not correct because I had my mouse someplace else. But
April 2009.
Yeah, so it was some date in April. I don't know the exact date that is, but I recognize that all of a sudden I started looking at it. I started recognizing it during the financial crisis, and then bam, as soon as I could, I said, wow, this is great. So here's some bad days. So these are not good days. All of those days are horrible. The worst one is probably the one right in the middle there where it just kind of went up and down during.
Yeah, right around the zero line. That's horrible.
Yeah, those are really bad. You want something that's going to, I've noticed that, I mean, over 20 years, and this should be obvious to all of you, hopefully by now, is that when the market opens up strong and it's plus 1,500, 1,800, it rarely reverses after the first half hour. It kind of continues in the same direction. And you also notice, take a look at this chart is kind of interesting. Take a look all the way over to the left. And you see way over to the left and you see where the top is, where it ended. Now take a look at the next day.
Yeah.
It's a little bit lower, right? And take a look at the next day. It's even lower yet. And so you had lower highs. Just like in a price chart, you can use the advanced decline line in the same way. I have done this so many different times. I've looked at those lower highs. I said, okay, the market's going down the next day. And look at it, it just dropped like a rock. The next day was a real big down day.
It looks like it opened right around there and then just, like you say, bam.
Yeah. So that's kind of a side note there. So the up-down volume, you really want to look like a top graph. Anything under, and these are all on 5-minute charts. The one below that is terrible. That's not, you don't want that, even though it's trending higher. And so, yeah, so it started out pretty good, just like yesterday, but then we had a break yesterday. It broke the true trend day. As soon as you start to see red and a green uptrend, or a red or a green and a red downtrend, that's done. It's done. So that day is perfect. All nice little stair steps. See, none of the after it got started, none of the bars were very, very large. They were all about the same size. And so, David, to go back to your question, and this is, you didn't ask this, but generally what I think is going on here is that the previous day, a large number of orders, or overnight, large number of sell orders were entered into the market. And the specialist for that stock, or for the NYSE, and there's lots of specialists, but in the key stocks, the ones that influence the index, receive these large orders overnight to sell. They are charged with creating a fair and orderly market. And so I think what they do is they take in those large sell orders and they parse it out and try to equalize the sell orders over the course of the day. And that's what creates the true trend day. I didn't put that in the PDF. This is the benefit of attending this trading room, is that they parse it. So in their charge of fair and orderly markets, if they just dumped everything of the orders that they got in the night before, the market probably would have gone down, instead of 400 or 500 points or 600 points. Especially during the financial crisis, it would have been down maybe 1,500 or 2,000. So they'd need to take those orders and spread them out over the course of the day. Yes, and there's the trade. That's the.
You still had 25K open. You weren't done yet.
No, I wasn't quite done yet when I took that. I figured I better take snapshots, and then I think it was pretty close to the end. So. And then I just got out. So
Greg was asking back to how that relates to the internals and the market time or Excel overall. I think, Greg, you'll like these, they work together. So if you see this above 60 or below 40, It's like
Well, the closer you get to that 80-20, so
yeah,
80 is very positive, 20 is very negative. The closer you get to that, generally what's going to happen is it's going to stay that way the entire day. If you get into that 40-60 range, the 50% is the balance between positive and negative. So if it's slightly above 50-60 or slightly below 50-40, that area is just chop.
that's the I don't trade this area zone.
Yep, very choppy.
So when you're above, you're looking for dips to go long,
Yep.
or you want to sell the rallies if you're down here below.
Yep, exactly. Those are the highest probability days of being correct on buying the dip or selling the rallies.
So look at the NQ or the YM here.
We opened where? Look, we opened down a little bit, right? I mean, well, on the right at the open, you're at 28, 549, 548.
Yep.
And we're up almost 120 points.
So we had a little run up and had a little pull back there. Not a huge one, but good opportunity to jump in there. And then I would be taking profits if I was in that trader there because that's the line of resistance. It has punched through it. So is the NQ, but it's always good profit targets.
And look at the SM price signal on the YM too.
Yeah, look how strong that is.
And not only that, but the person's pivots held up perfectly.
Yep.
So, I mean, you had lots of signs.
Yeah,
if you look at the internals is the most important part, though, because if you have a very strong up move in the internals, then you go to your price signals, then you go to other indicators, to help you buy those pullbacks.
Greg, the main one is the person's pivots is what's drawing these, the pink line in the middle. Then these are basically support, and then resistance. It's based on the previous days, open, close, high, low. Then it draws lines for the next day. So that's the main one that you're looking for is person's pivots.
Greg says 80-20 is trend, 60-40 chop. Exactly.
You're welcome, Greg.
Did you already go over the lines that you have? Oh, okay. So you just did that.
All right. We're at Q2, so we're rolling to the top of the hour. Today's been a fast day.
Yeah, it has been fast.
Anything we've missed for you guys? Hopefully you've gotten a lot out of today. I think it's definitely going to help everybody that's trading the VA get a little bit tighter in and get those ratios down, whether you're going to use the micros or a different ratio of the E-minis.
So the new ratios, the spreadsheet you did there, I would imagine you're going to put those up in the membership area?
Yes, these will absolutely be up in the membership area for you guys to collect all of that so you don't have to do all this repeat. Because look, I even did formulas. I didn't just type in numbers.
Oh, good for you.
Woo.
Oh, look at you, man.
And that was at like midnight.
Oh, jeez. And you were sick.
Right. I said that's probably why I got sick. I stayed up too late.
Yeah.
But this was one of those, I need to figure this out kind of thing. But I'll be honest with you, Dave. I'm really glad I did all that without Dave, and he didn't have to help me at all.
Yes, I'm very proud of you. Your Excel, and it's definitely. I mean, you had to really think through that, and you're right on. I mean, that is perfect. And it's very easy to tell how many contracts you need to do.
It's a nice thing too that people, so you can see what kind of leverage you're doing just in trading basic futures that people don't know. This will show you, hey, you're even trading a micro contract on the YM, you're still controlling almost $15,000.
Right.
And you only need to put in $500 or $5,000 to open that account.
On Tradeovite, it's $50 margin.
Yeah, so whatever the math is on that, 50x.
Yeah, that's a lot.
X.
Yeah, it's a lot.
So I'm just going to add a few here. People saying, yeah, I trade, 10 contracts of E-minis. It's like, that's big boy trading, You need to have a ton of collateral and a ton of margin for that.
Yeah. Yeah. And I'm sure I haven't looked at the margin rates for YM, but I'm sure they went up with the volatility yesterday. Remember that the margin on all of the future contracts is based on volatility. So the lower the margin rates when volatility is low, when volatility goes up, they're going to raise the margin. So, and a margin is not a deposit; it's a performance guarantee. So you're basically putting up money to guarantee that you're going to pay them if you lose. And can you? Andre says, can you day trade on Tradeovite below 25? Absolutely. You can do the MYMs and the MNQs for as little as $1,000. You can put $1,000 into Tradeovite, and you can trade a couple contracts for the YM. During the day, the margin rate's only $50. Or $250. Maybe it's no, it's $50. Overnight, if you trade overnight in the after hours, then it goes up to like $500.
Well, Andre, remember the 25K? That's the pattern day trading for stocks and other
Yeah,
things.
that's only the 25K is only for stocks.
It doesn't apply to futures contracts or what they call 1256 contracts.
Yep, that's exactly right. So you don't even need 25 for like TOS or something like that. You can trade as long as you have enough margin in your account. Now, TOS margins are pretty high.
Right. Yeah, they're definitely one of the higher ones.
Yeah.
And if you start out with the micros, that's where the super low margins and everything, that's the nice entry. Then when you graduate to the E-minis, you're going to need more than a $5,000 account at that time, because you won't be able to hold open, one of these and 8 of those, or 5 and 4. You're going to run into margin problems. So as you learn and scale up, starting with the micros, once you build it up to 10 or whatever you want to, then you can start looking at adding in E-minis trades versus the micros trades.
Well, I would even consider, while you're doing more contracts, so you're going to have more commissions on the E-minis. But the other advantage of the micro E-minis is that you can scale in and out. So you could do 5, 6, 7, or 10 contracts even, which equals one YM contract. But you can scale in and scale out of them. With a YM contract, you're buying the full contract. You're just in and out.
Sure. And that's less along the vol arb, right? And just for straight up directional trading. Absolutely.
The final comment I'll make before we wrap up for today is that now that you've done this, if you look at the NQ, there is no pair to the YM. There is no equal contract, right? I mean, there isn't. You take a look down there, you'd have to go 4 YM contracts to 3 NQs to get even close.
Right.
Well, I guess the best one is the 5 contracts of YM to 4 NQs. That'd be really close, yeah.
Yeah, if you want
on the full contract.
Yeah, if you want to do like 286, that's not going to work. There's nothing in here 429. There's nothing at all that pairs up close.
Well, 5 YM is equal to about 4 NQ. That's it, and that's as close as you get. Yeah. Yep. Unless you go up to 10 full YM contracts and 8 full NQ contracts, which is 1.4 million.
Yep, that'll be the next math because it just doubles.
Yeah. Yep. Greg says for stocks, if you open just a cash account, you don't need 25K, and the PDT doesn't apply. You are just limited to cash in your account. That's right, because you're if you got a cash account, you can't use margin.
Right, no leverage.
No leverage there. And the money from each trade is held for 24 hours. This applies to options as well. You can't trade options in a cash account, though. So you have to have a margin account to trade options. But yeah, I mean, for the Wealth Masterclass, we're doing everything in a cash account, because otherwise you're not going to get paid the dividend. You won't get paid dividends if you use a margin account. You have to use a cash account. Because what happens is you use a margin account to buy the stocks to pay a dividend, then the brokerage will take that dividend because they own it. If just like a house, if you borrow money on your house, you don't actually own that house until it's paid off and the bank is made whole. Otherwise, the bank can come in and take that house anytime they want. Same thing with a stock that pays a dividend. If you do it in a margin account, the brokerage actually owns that stock and they take the dividend. So if you do dividend stocks like in the Wealth Masterclass, you want to do it in a cash account. Greg says he's been trading options in a cash account with TOS. Really? How do you do that? Maybe it's changed, because I opened my first options trading account in 1984. So I haven't opened a new. I opened Tastyworks, but I don't think they offer cash accounts. They only offer margin for option trading. It started this last year, really? Wow. So there's no leverage then with the cash account. You can write options. You can. So what level of options can you do? So can you do spreads?
Level 1 or
Maybe it's just level 1, buying options, buying calls, buying puts without spreads. Because when you write an option, that's where you need the margin.
yeah, because you're right. You're short and you don't own it.
That's right. Yeah. So you're probably buying long calls and long puts then. You're limited cash, just direct. Yeah. Directional buying. Yeah. So you're level 1. Exactly. I was doing spreads in March of 1987. Those are fun times.
We're back in them.
Mm.
All right. Well, hopefully that was helpful, you guys. And I don't know exactly what day I'll have it up there, but it will definitely be all up on the member site this week. Whether it's tomorrow or Friday, when I do the regular spreadsheet update, I will let you know because I have to do some massaging because that's in a different spreadsheet. So I have to move it into the new one and redo a couple formulas. So I'll get it all worked out. Worst case, by the end of the week. Best case, tomorrow or Thursday.
Yeah, and shout out to David L. Thank you very much for bringing this up. Great stuff. Good questions. That's what we live for. Good questions.
Do you have a link for the $5 a month update for Andre? For the market file, the daily updates, that it's $5 a month.
Oh yes, for the Strong Market spreadsheets, it's $5 a month. Just send me an email at support@strongmarket.com and I will send you the link.
That's right. Perfect. You got that, Andre?
Awesome.
Perfect.
All right. Great, guys. Thanks so much for joining us again today. We will see you Thursday.
Yep, we'll be live and in color. Thursday might be a half an hour, but yep, we'll be back Thursday.
All right, guys. Have your questions ready. We'll see you then.
Take care,
See you, Dan. Hope you feel better.
Thank you.